Welcome back to GoldSeek TV. I'm here in Zurich with Ronnie Stoeferle, the managing partner at Incrementum and the author behind the Gold We Trust report. Ronnie, thanks for joining us.
Peter, good to see you.
It's great to see you. A year ago, we were at the same conference talking about gold and silver. Gold was several under $2,000 an ounce. Silver's in the low 20s. Here we are. Gold and silver are a lot higher. But now we're starting to get a bit of a pullback. Has this big move ended, or are we just in a period where this is pausing?
Well, we shouldn't get too greedy. I mean, that was such a major move. Where I would say, okay, we have to digest it. Everybody says it's only due to Donald Trump being elected. I would say that the market is looking for some sort of a reasoning or an excuse why actually gold is weaker now. I think it's pretty healthy. It's normal after such a big move. But then, one of the main reasons that I could see is that the market is perhaps reducing this war premium that we had included in the gold price. If it's like $200 or $300, I don't know. But I think the chances for peace in Ukraine, that's definitely something that that people now see coming, and that on the surface could hit the price of gold. But then on the other hand, I'm super relaxed. I mean, if we have a look at the first term of Donald Trump, gold was up 56% back then. He says that he's the king of debt. He proved that in his first term. So I'm pretty relaxed. So I think it's just a normal and a healthy correction.
A little bit of a reaction from the surprise, another surprise kind of election results for many people, just reacting to it. But once things settle down, it sounds like the fundamental drivers, many of them continue to exist, which is pushing up the gold price, which you had just mentioned. Debt issues and geopolitical issues haven't resolved themselves. I don't know, with Trump and China, wanting to put tariffs, how does, maybe the shift goes from Russia to China, and what do you see there?
I would say that actually we in the Western world, we completely overemphasize our importance in the gold world. And this was actually one of the key topics of this year's In Gold We Trust report, called the New Gold Playbook, where we said central bank demand is now a really, really important driver for the price of gold. The second thing is that the marginal investor is not the Western financial investor anymore, but rather emerging market buyers, India, China, the Mid East, being responsible for the majority of the gold demand. And that's real physical demand and not paper demand. I think we tend to forget that the center of the gold world isn't in the Western world anymore. And therefore, I would say it is really primarily this love trade and this cultural affinity for gold that has driven the price of gold recently, while Western financial investors completely missed the party. I mean, you can tell, have a look at ETF demand, for example. We've seen very modest inflows, five months in a row, but still there's a huge gap between ETF demand and then, on the other hand, the price of gold. So going forward, I would say weaker US dollar, perhaps another inflationary wave. Those could be big drivers for the price of gold, and also more demand coming from Western financial investors. And then on the other hand, perhaps it's going to be some sort of a Liz Truss moment for the US bond market that we could be facing at some point.
So the underlying problems still remain. There's hope that some of it might get changed. But like you just mentioned, under the first Trump administration, we still had a lot of new debt creation, and gold did quite well. And we didn't even, that was prior to actually the COVID situation hitting and gold. So there is a fear that everything's going to get fixed. And from gold bugs right now, that Trump is just going to be able to just like that change everything. And I think that's a little bit naive.
It is very naive, yeah. And I mean, let's face it, from now until the inauguration in January, he can basically say everything, yeah?
Yeah.
And it seems that everybody wants to believe that he's the big savior and that he's solved all the problems that we have, not only in the US, but globally. It's not that easy, actually. And I think those big structural trends For example, this de-dollarization, the fact that emerging markets, they're more confident. They want to be taken seriously. They want to have they want to circumvent the SWIFT system. Everybody realized with the sanctions against Russia, actually, you want to have as a central reserve asset, you want to hold something that doesn't have any counterparty risk. So I think, can Donald Trump really change all those big structural trends? I don't think so. But I can say that it won't be boring. Yeah, I think there will be lots of surprises, and of course, I mean, he's got some very interesting characters in his team, with Elon Musk, obviously, but then also Ron Paul playing a role, which would be, if you've got an affinity for Austrian economics, yeah, then it's definitely a great addition to the team. But again, I think it would be naive to believe that he can solve all our problems.
Well, he's not a dictator. He still has to work with a lot of political politicians and parties and influences. So it's a big challenge. So in our sector, we've had this big run in gold and silver prices. There's a pullback now, but in the mining sector and the gold and silver stocks, we haven't really seen a big run yet. It was kind of disappointing to see the gold and silver stocks almost barely outperform these metal prices. So what do you see happening in the coming year? Are we going to start to get more respect as these miners start to make more money and they start to show improvements in their balance sheets and treasuries and so on? Or what is it going to take to attract these investors back into the sector?
Well, I think we've seen some signs that actually the situation is improving. Now, the last couple of days were brutal. So the mining stocks have failed to really outperform gold this year. And now they're underperforming again, which is frustrating, obviously. But then on the other hand, if you just look at the balance sheets of, I would say, the better mining companies, then you can see a tremendous amount of free cash flow generation. You can see really, really healthy balance sheets. Yeah, you can see that the good companies have their costs under control. There are still companies that really disappoint. They continue to disappoint with soaring costs and all the mistakes that they've made in the previous cycle. But I think that that's a job of a fund manager, actually. Yeah, differentiating and separating the wheat from the chaff. So I think going forward, the starting point for the mining space is an excellent one. Yeah, and just the margin expansions that we've seen over the last couple of quarters is terrific. And now we'll see what they're going to do with all those cash flow produced. But that makes me pretty confident. And our Incrementum active aurum signal is still showing us green lights. Yes, so we're still basically fully allocated in the mining space. And I think that if we want to draw a parallel between the first term of Donald Trump and the next one, we saw that actually the gold price bottomed out in, I think, in January. And then actually during his term, gold was up 56%. So perhaps we will see this necessary and healthy breather over the next couple of weeks. That's the time to build positions. That's the time to do your homework, and to allocate capital. Because I mean, I've got no doubt that we're in a stealth bull market. And what should be the strategy in a bull market? You just buy the dips. And I can tell you, Peter, at this conference now, gold is down like $200 from the highs. There's an enormous amount of pessimism here in this industry, actually. Yeah. And I would have thought that people are, they would just embrace the opportunity that they're being given,
Right.
to get in at significantly lower prices again. But I think that already shows you that we're having a sentiment that is not the sentiment that you typically see at the very end of a secular bull market.
Right. So that's a good indication that we're still early stages of a much larger secular bull market.
Absolutely.
Like you said, stealth bull market, especially in the West, which hasn't participated in much of this gold run. They can't barely getting into the ETFs. And like you said, the gold world there's a big world out there, and it's not in the West, the gold world, it's really driven
Yes,
to the
but
east.
we have to realize it, and I think therefore you have to adapt your playbook. Yeah, and that's why we had this as a leitmotif. And I think, you know, based on those new rules, you obviously have to, you know, use different indicators. Yeah, you have to look at different sources, and that's something that I totally miss in the Western world. People still think that, you know, CPI and rate decisions are like the primary driver for the price of gold. I would say it's actually it's more and more coming from, and there was a great study by the World Gold Council actually quite recently, where they analyzed the intraday moves in gold, and they said now really the majority of the gold trade is being made in Asia, while only the volatility is coming from North America. And that was a very, very interesting study. So that kind of confirms our view.
Fantastic. Well, you do a lot of work in this industry. You put a lot of work into the In Gold We Trust report. We'll be sure to share a link below. It's free access, right? Anyone
Yes,
can
it is.
download it.
Yeah.
Fantastic.
Yeah.
So we'll be sure to add that there. And Ronnie will have to follow up in the coming months to see how things play out as a new administration takes place and this pullback works its way through. So thank you very much for your time,
Thanks,
Ronnie.
Peter. Thank you.
Cheers.